Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we finished up our series on candlestick patterns with a look at the shooting star and the inverted hammer. In today's lesson we're going to start a new series on what I consider the most important concept in trading, which is ironically one of the concepts that's most often ignored by traders, and that is one of the major reasons why they fail. And this concept is known as what is known as money management. In my over 6 years of working in financial services, I've watched hundreds if not thousands of traders trade, and one of the things that's always surprised me is how many people who've had successful careers and accumulated large amounts of wealth through those non-trading careers who open trading accounts and quickly lose large sums of money making mistakes that you would think even the dumbest of traders would avoid. Those same traders are the ones who, if they watch this lesson, will skip over this series thinking that it's too boring for them or that they are too smart to make the same mistakes that so many others make, and will want to move on to what they consider the real meat of trading, which is lessons on how to pick entry points. What these and so many other traders fail to realize is that what separates winning from losing traders is not one's ability to pick good entry points, but a trader's ability to anticipate what they're going to do once they're in a trade, factor that into their trade entry, and then their ability to follow that plan once they're in a trade. For those few who do get that money management is a huge factor in one's trading success, many of these traders don't understand the huge role that psychology plays in managing your trades and consider themselves above having to work on channeling one's emotions when in a trade and how basic emotional responses affect trading success. So in this series of lessons we're going to start with a look at the psychology of money management and how this causes so many traders to lose money, and then we're going to look at specific strategies that can be put into place to manage trades and deal with some of the psychological responses and emotional responses that come about when trading. While perhaps not the most exciting part of trading, I can assure you that if you don't understand the concepts presented in this series of lessons and work hard to expand your knowledge of these concepts and work hard on your own, on learning how to channel your own psychological and emotional responses to trading, that you're pretty much doomed to failure as a trader. Having said this, I can also assure you that if you do understand the concepts presented in these lessons and you work hard to expand your knowledge of those concepts and work on your own emotional responses to the different things that happen when you're in a trade, you're going to be well on your way to trading success.